Hello, hello, hello. What's going on, everybody? Welcome to Al Stock Trades. How's everybody doing? All right. So, well, we got some things to discuss. I wanted to point out some really interesting things that I think you will like. Okay. We're going to go ahead and talk about Peter's post from a while ago, talking about Warren Buffett, talking about, why is the CFO of Clover Health posting about Warren Buffett, talking about Benjamin Graham, and why is Clover related to all that? And how ironic is it that a CFO of Clover Health talks about Warren Buffett and Ben Graham, and our Mastering Bundle course talks about Warren Buffett and Ben Graham's analysis here. Warren Buffett's here, Ben Graham, using the intrinsic value calculation. Just like how it's taken a couple of quarters and years for people to realize that maybe Clover is a software company, I think now people are starting to realize that the Al Stock Trades platform, maybe there might be a reason why Al Stock Trades has been talking about Clover. Maybe there's a reason that if you do deep financial analysis, you might actually see that Clover may be undervalued. So we're going to be talking about that, okay? Let's do a quick intrinsic value calculation straight off of the bat. Then we're going to look at algo flow, and then we're going to go ahead and look at support and resistance. And this video is going to be very insightful, okay? So if you don't recall, we can go, in terms of the free cash flow, Clover Health and their Q1 and Q2, they've been positive free cash flow. In this specific intrinsic value calculation, I am only going to have Clover grow at 11%, which is their most recent Q2 earnings report showing that is 11% growth. And then what I'm going to do is I'm going to take Q1's and Q2's free cash flow, and I'm just going to use them. I'm not going to use Q3's, nor I'm going to use Q4's. And I'm going to show you a number, the bull case, that you're going to be like, holy crap, this intrinsic value calculation works. What Al has been talking about actually makes sense, right? It's one thing to say the stock is going to go up and then it goes up. And it's one thing to say it's going to go up to this price target and this is why, right? So, and the beautiful part is anyone can do this, which is why we've had a lot of support and gathering from people all around the world joining our platform. And I'm very happy and excited for that. So what we're going to do is we're going to open up the terminal. We're going to open up the help menu, and we're going to do the stock fundamentals here. And we're going to go to we're going to press the quarterly earnings for Clover. We're going to click on, my clicker is not working. Where is the clicker? Or I guess we'll just type it in here. We'll do that and we'll type in Clove, okay? And as we do that, we're going to get some data. And this data is here, right? And we're going to go to the top, and we're going to go to the most recent Q2 of 2024. And I don't care about all this. All I care about is free cash flow. I'm going to go down here. I'm going to say, okay, so they got 44.36 million in free cash flow. All right. So I'm going to type up here. I don't know if you can see. I'm going to type 44.36. Then I'm going to hit the @ sign. Okay. Then I'm going to scroll down. I'm going to look for Q1 now. Oh, here's Q1 2024. Let's scroll down to its free cash flow. It is 25.49. All right. So I'm going to go here. I'm going to type in 25.49. Okay. This is in millions, of course. I'm going to take this. I'm going to copy it, open up a new tab, and I'm just going to have Google do it for me. If you add 44.36 million plus 25.49 million, you get 69.85 million in free cash flow from this fiscal year. We're just going to do that. We're not going to use Q3, and we're not going to use Q4. So then we take 69.85. We go back to the handy dandy intrinsic value. We'll go ahead and refresh it. We'll have 69.85. Remember that number, 69.85. We're just going to drop it here. 69.85. Okay. We're going to go 10 years into the future. We're going to use an 11% growth rate, and we're going to divide by the number of outstanding shares, which is around 496 million. And would you look at that? Look at that. Ladies and gentlemen, what does it say the bull case is? $3.45 as of today. As of today's growth rate for Clover, I just used the Q1 and Q2 numbers. It is the bull case at 345. Now, why is this important? Go to the stock price. What is the 52-week high? $3.47. Our intrinsic value calculation is off by 2 pennies. Ladies and gentlemen, you're starting to see the pattern. 347 was tapped yesterday. All right. So what does this mean? What does this mean? Okay. Okay, great. You're able to figure out the bull case. What does this mean? Ladies and gentlemen, we're no longer at the recession case anymore. You see, remember when Clover was trading, we were inputting these numbers and we were doing estimation of future free cash flow. And we took 1.337 million and multiplied by 5%. You get 65 million. I've done it so many times, I can do it in my head now, which is just Q1 and Q2's free cash flow. And even then, you would get a 60 penny stock price and 80 penny stock price. And everyone's like, your calculation doesn't work. I'm like, no, it is undervalued. Okay. Guess what's happening now? Now the market is treating Clover on its bull case. On its bull case. So what does that mean? What does that mean? That means that as soon as Clover releases their Q3 earnings report, this is called a responsive stock now. This is called a fundamentally sounding responding stock, which means that once the next earnings report comes in, if it's free cash flow positive again, it will respond by that nature. Okay. And we'll be able to show kind of how it responds. Okay. That's number one. Number two, let's say, for example, they release a SaaS deal. Okay. It'll be a responsive stock, which means that whatever that SaaS deal is, whatever its free cash flows brings, and whatever its growth rate brings, we are going to be landing more towards the whatever bull case it is. Like, let's say, for example, Clover comes out and then says, we're going to have 176 million of free cash flow, and they actually do it, and we're going to be growing at 25%. Then automatically you're going to go 25% and 176. Boom. $23.91. So again, it depends on what they tell us. Obviously, we don't know the numbers yet, right? That's when the numbers change. Right now, the numbers that they've given us for Q1 and Q2, again, we go back here. What I tell you, Q1, if you don't believe me, we'll go to the freaking stock terminal, that our proprietary stock terminal that we created, 25.49 million. Okay. And when we go ahead and we do 44.36 million. So let's go ahead and add that 69.85. We'll go back 69.85. Okay. And you can see now it's $3. Well, hold on. Oh yeah. 11% growth rate. Sorry. $3.45. Now, Captain Howdy, he says, this shit's blows my mind. Ladies and gentlemen, you are starting to get a taste of Wall Street. This is what Wall Street does. They don't want to teach retail investors this information. They don't want it. They don't want you to learn this information. Don't you find it ironic that I teach about, intrinsic value calculation, the intelligent investor, Benjamin Graham, and then Warren Buffett here, and we do our intrinsic value calculation, and we combine both worlds of technical analysis and fundamental analysis. And here we are. We have the CFO going ahead, talking about this, talking about Buffett's journey, talking about he grew up with his mentor, influenced by Benjamin Graham, and essentially his adaptedness at identifying undervalued companies led to significant returns, setting the stage for his future endeavors. Ladies and gentlemen, these words are not being made by me; they're being made by the CFO of Clover. He's not talking. I'm not the only one talking about the Oracle of Omaha, Warren Buffett. You can see that there is a value proposition in Clover Health. And now Captain Howdy here saying this is blowing my mind, because you no longer need the analysts' help. Analysts can go screw themselves. Okay. I'm teaching you how to calculate the value of a stock. Okay. Oh, here it is. Hey, Brad, what's going on? Hey, stellar no nonsense video. Exactly what we're looking for. This video is, I'm proud to share with those thinking about joining the platform and our mastering stock market. Yeah. And this is one of our emergency doctors. You know what I mean? You know what's so cool? We just got a commercial pilot also sign in too. So we got pilots. By the way, I love pilots. I think surgeons need to operate like aviation because there's a lot of crazy surgeons out there. But again, that's a whole different story. No, I appreciate you, Brad, but you can see the power. I appreciate you a lot. I'm hopeful. I'm in the spring semester. I'll be doing my EM rotation. It's coming soon. So you can see the power of the intrinsic value. You can calculate the value of the company, whatever company you want. So that means what happens if you want to get in a company, or I really like this company, but then you go ahead and calculate it, right? You calculated it, and then all of a sudden it's worth $2, but it's trading at $20. You really want to get into that company? No, you're going to lose your shirt. You're going to go bankrupt, and that's why retail loses. It's a mathematical model, but people don't get that. And I don't understand why America government didn't teach this, but it's almost like they want you to work. I mean, think about it. You have 25 million Americans. Half of them are going to be kids, so they can't really enter the workforce. The other half is, let's say, adults. 10% of them, let's say, I don't know, they were about to retire. They need workers. Who's going to make the Starbucks so we can make the earnings? Who's going to wrap the burritos for Chipotle to get the earnings per share and free cash flow up? I know that's terrible to see, but we need workers in order to make money in the capitalism, and we don't need more investors. So they don't teach this, but I'm teaching you how to be financially free. Okay? We just act by just putting in Q1 and Q2's data and 11%, we accurately calculated the bull case. Now it's weird. If it was the bull case is 345 and it was trading at 80 cents right now, you'd be telling me, Al, you don't know what you're talking about. This is full of crap. No, it's not, right? Now people are saying, oh, this makes sense. This thing was a high of 347. Well, it's because it's starting to become a responsive stock. Why? Because we are going from negative to positive free cash flow. There's a lot of people talking nonsense, shorts and horts and courts and lords. Yes, there's shorts, right? But guess what's going to happen? It is becoming a responsive stock. Okay, which means that as soon as Clover releases new guidance, as soon as Clover shows more free cash flow, more SaaS revenue, or starting of SaaS revenue, you're going to see this pop because it is fundamentally responsive. Think of to all of my biologists out there. Now Clover Health stock has receptors on it that can do signal transduction effectively. It no longer has type 1 or let's say type 2 diabetes with its insulin receptor deficiency. The receptor's working now. It is responding, which is what we see when we go from negative to positive free cash flow. Okay? I'm right there with Brad. I'm signing up. And for all the people that are interested, and that's why I think about 60 to 70% of people on our terminal are about to be millionaires. Don't you think it's kind of weird that some person from Tucson flipping a coin that people think is gambling in the stock market somehow ends up becoming millionaires, and then somehow they associated with themselves with Warren Buffett and all the other Benjamin Graham and Graham Doddsville investors from all around the world, from Monish in India, from Bill Ackman, and somehow all of them are successful? This works. Just like how Clover has shown its MCR reducing and shows its Clover Assistant, now you can see the power of the Al Stock Trades platform. Okay? For individuals that are interested, this deal will end soon. Use coupon code SAS and get on with changing your life. It's simple as that. Okay? Simple as that. And the more smart people we get, the better and stronger community gets. All right, still working right now. Let's see here. So let's go ahead and sorry, I didn't get that comment. Let me go up to the comment here. Where is that sweet dip? Speaking of dips. Good. Where is that sweet dip? Okay. So now let's go ahead and we're going to go from the top of the comment section to the bottom. But first, we're going to switch. We did the intrinsic value, right? Now we're going to switch to Algo flow. Okay. So now we're going to go ahead and go back to the terminal. We're going to zoom out a little bit. And then I'm going to go to Algo flow. We're going to go here. Actually, we're going to go here. And then what I want to do is I want to get the actual command real quick because, I can ask our GPT. In fact, I'll just ask it. I'll ask the AI because I'm too tired. Stock GPT. What is the Algo flow command? What is the Algo flow command? It's going to tell me here it is. It's the Algo flow. Here it is. So now watch this. CLOV. So we're going to go here. We're going to search for it. And more specifically, I made a video yesterday talking about Clover's Algo flow. Let's jump to that command. Okay. So you remember yesterday, 7:45 in the morning, I made a live and I said, hey, this is the Algo flow. This is very good because it takes in all the options data and it graphs it for you. And again, if you go to flowalgo.com, they're selling this for $100 a month, right? People get lifetime access to this, to our platform once they join. I mean, it's just wonderful, right? So what does it show you? As the Algo flows down, it's predicting that the stock price is going to go down. And if you look at it today, what happened to the stock price? We were down, right? We were down, from peak to trough, 9%, but we ended up recovering. Okay. So wait, we're going to go back to the terminal. So you can see the power of the Algo flow. You can see how as it goes down, it's becoming bearish. But again, if it turns red, then it's really bearish. But you can see as it goes down, you can get some inclination and data from it. Okay. So now let's go jump down now. And let's type in Algo flow and let's do like 5 days if we have the 5 days. Because then there we do. Let it load. Give it a moment. My internet's kind of slow here. I don't know why. You see a little circle here? That's fine. Let me just delete this and I'm just going to run it again. Maybe I'll do 4 days. Yeah, I don't think it's the thing. I think it's just my internet. Let me just restart I'm going to start the terminal here. Yeah, there it is. Okay, go. Okay. This is the longer one, right? So you can see we were growing and then the stock literally, as soon as the Algo jumped, the stock jumped, right? But now the Algo's falling and the stock is falling. But guess what? The stock's coming, it's starting to consolidate. Now, if you were to draw a technical analysis line here and try to connect the dots here, you see that little line right there? It almost looks like, higher highs, right? Sorry, the higher lows. So we could be consolidating, which is good. It's which is what you want. So then we go in and we go to the Clover stuff, right? We go to the technical analysis here. And remember I made the video of the quarter? I made that video and I also posted it on Reddit. I said, hey, listen, the MACD's curling up. This is it, guys. Are you ready for this? We're about to go boom. Remember I said, look at Oscar. Remember how it, boom, right? Remember that I said Palantir? Boom, right? Remember that? Remember that little curl, right? So Clover starting its curl, right? I mean, think about it. Give me a stock that someone has analyzed like this to show you how value investing works. Millionaires, multi-millionaires will be minted in the Al Stock Trades platform and beyond. I mean, how amazing is this, right? How amazing is this? I mean, literally, the legacy of Benjamin Graham lives on, not only in this platform, but within our CFO speaking about the Oracle of Omaha. Okay, so now if you look at the monthly chart here, you could see that a lot of people notice that this is the 50-day moving average. So I think we're about to approach that soon. We're coming, and so it's going to happen. So again, time is very fast, right? So what is it between 4 and 5? Oh, 4 versus 5 days. Just to answer your question, Dish. 4 versus 5 days. This is one of our amazing members. He serves in our wonderful military and is a very nice guy. Okay. So let's go ahead and there's one more thing. Oh, yes. Let me go here, go stock. Actually, I'm going to leave the terminal so he can see the question. I'm going to open up another one. We'll go down here so he can see the question. Oh, yes. Let's look at the projection. Speaking of which, thank you. This is a new member. He's already working. This is new. He's just joined. I'm new. Say hi here. So very nice guy. He's already working hard, doing his research. So very good. I think that gentleman has like 600,000 shares, which is amazing, right? And it doesn't say his name, so it's great to, right? So as you can see here, look what holy shit. Holy crap. Look what the AI is saying. The AI is saying that this thing's about to, guys, are you seeing this? $3. Okay, this thing projects out into the future. This thing is $3.40, $3.60, $3.80, $4 freaking dollars. Guys, we are going to the moon. You understand what I'm saying? Guys, listen, if you look at the projections here and go back to when it says 60 cents, 70 cents, $1, if you guys follow out through our videos or actually part of the stock terminal, you guys would have been ahead of the game, because think about it. This AI, what it does is called a Monte Carlo sequence projection. It takes in all the buys, all the sells, all the dark pool data buys, and it aggregates that data. And it basically shows you what is under the hood and what Wall Street thinks. Okay. See how powerful this is? All right. And then if you mix this with fundamental analysis, right, you might even now get to a point where the market might say, I'm going to trade above the intrinsic value, which makes sense, because if Q1 and Q2 gives me this, I know Q3 and Q4 might be positive because they're going to have to pay something with ACM. It's going to be high, definitely higher than that. We know SaaS is coming. We know they're going to return the growth, right? So you're starting to see the pattern here, right? Okay, so there's that. Sorry, I keep clicking the wrong thing. So then now we look at the. I mean, look, are you guys seeing the y-axis? Are you guys seeing this? Hello, like holy crap, what is that? Oh wait, sorry, I'm getting some questions here. What data is included in graphing the algo? Oh yes. Let's go back up. No, different terminal. No. Where'd it go? Oh yeah. So you know how like Irish Vanity or Clover Vanity, you keep changing your name, man. I'm already trying to learn a lot of things in medicine. My brain is tired. One of them, right? Irish Vanity. He looks at the options chain, right? And he's trying to predict the overall movement. So what this tells you is it graphs you what the options people are thinking, right? It kind of shows you, and usually, again, it's not just retail options, it's also institutional options. So it gives you that, right? So that's kind of good. And you know what's funny? Once we start getting into, institutional investor buying in, you're going to start seeing in our auto posting where institutions that buy a lot of options, it's going to start flagging Clover up. And then you're going to start seeing those signals come through. So it's coming right now. It just needs to get to, remember when Kathy Woods bought Palantir when it was free cash flow positive and net income positive on the fiscal year basis? That's when, I think we're going to start seeing those signals popping. And then by then it's it's never too late, but by then it's like, okay, you know what I mean? It was a freaking under $1, you know what I'm saying? That's a good deal, right? Al has already changed my life. Al is the man. I appreciate you, man. What price do you think it will end of the year? I don't know. I could tell you it's gonna be up. I don't know how up, but it's gonna be up. I'm gonna say this: if it was $5.50, I wouldn't be surprised, right? If it was like $15, $20, yeah, I would be surprised. I'm like, okay, wow, that's pretty fast, right? But yeah, right. What's up, Al? Did I miss something? Yeah, watch the video in the beginning and they'll be able to catch up here. Everyone had so long DCA, now everyone wants a deal. Isn't it funny how market psychology works? How long has a stock been under or around $1? LOR, you collected our premium but cannot afford super speed internet. Well, what's funny, Lee? I'm actually traveling now, so I'm not at. If I was at my studio right now, I would, show my face, my camera, my studio. But unfortunately, I'm traveling, and I don't have control over Airbnb's internet. So I'm sorry. Right? Hope I can give you something else. Right? Dish, awesome. You got to live below your means. We're gonna talk about this now. What up, Al? What's going on? Teach me grapple. Thank you, Al, for helping me become a millionaire. I love you, man. I love you, Coach Brian. We're gonna open up Coach Brian Cobra Kai's everywhere, right? We're going to call it Coach Brian Kai or whatever, right? Coach Cobra Kai. I love it, right? That's it. Right? No, I appreciate you, man. I appreciate you. God bless you, man. We've made so many, we did it together, right? So many millionaires have been made, right? And a lot of them are in our platform, which is amazing, right? So that's why, imagine joining here. Imagine if I started from nothing and I had this platform, being surrounded by a bunch of millionaires. Holy freaking shit, man. That's why I said there's a hidden agenda behind the stock terminal. There's a hidden agenda, and it's people. It's people. That's what makes it even better. Okay. So could Butterfly Network be the next Clover? I don't know. I need to look at the thing. It took me 10,000 hours to analyze Clover. That's how many hours. It's going to take a long time for the next one. You know what I'm saying? Yeah. So we're not going to do it in this live, right? That's it's very difficult. You know what I mean? Come online in our stock terminal and then, start digging in the numbers. Sleep on, get free internet from library, can calculate intrinsic value. I know, right? It's insane, Lee. It's insane, isn't it? Right? It's insane. I don't really do much sleeping anymore. I wish I did. I feel like back then I did more sleep. No, it was a different type of hard. So there it is. Okay, where do we go? Okay, yeah, support and resistance. So let's go ahead and talk to our AI, and it's really cute. Like if you talk to our AI, you could say, "Who made you, and what is your mission?" You know what I mean? And it'd say, "I was created by Albert Allen. All stock trades. My mission is to enhance financial literacy and help users how to calculate intrinsic." I mean, literally, the mission is very simple. So let's go ahead and ask it here. Give me the support and resistance commands. Yeah, let's do this one. This one's more for crypto. Let's use the one for stocks. So let's do this one here. Let's do CLOV and let's do the minute chart. Okay. Let's do CLOV and then let's do the hour chart. And let's do CLOV and let's do the day chart. Oops, sorry, going too many commands here. Day chart. And let's do again, and let's do the weekly chart. So I doubt this is going to happen, go all the way down here. The AI needs to reset itself on the day chart. You can see we jumped up a lot. And the thing is, there's a lot of like hidden fundamental lines due to where Vivek bought and whatnot. We have a 320, obviously, resistance line. You guys already know around 324. There's your 320. So we got to pass this. We got to be able. So now it's a resistance. We got to look at that. But remember, those are going to be easily passed. They go up and down. The big one, like I told you, remember I said, once we pass 109, we're going to 167. All right, we did. Once we pass 167, we're going to go to 265. Guess what? We did. Now we're going to go to 419. Before we do that, we got to take a trip to 350, which is not only a technical analysis resistance, it is a fundamental analysis resistance at 340, 345, which means that the market has to say, okay, Q3 and Q4 are going to be positive. I'm willing to go above intrinsic value for the fiscal year. Okay. Which I think it will. Because what other catalysts do we have? We have the Jackson Hole on Friday, which is, I think, is going to be dovish. And then we also have the rate cuts coming in September. So I really think that, then we have, then we have those earnings coming soon. Right. So there's a lot. So there's that. So we looked at support and resistance. Right. So let me just kind of figure out if we did what we did. We did intrinsic value, we did algo flow, and we did technical analysis, and we talked about Peter, right? Who, trust and inspire, right? And look at that smile. He's like, yeah, look at that smile. He's like, you guys don't know how this, he's like, you mother effers don't know how much this stock is about to go up. Right. But yeah, so folks that are interested in wanting to change their lives, it's very clear. We have a lot of multimillionaires on our platform. There's the platform. In fact, there's the thing. What I also want to do, really, just really quickly, because this is very, very important. I'm going to open up here. Actually, no, I don't need to open up. Yeah, I'm going to open up a Google Doc. Hold on, I'm going to open up a Google Doc real quick. Okay, let me open up a Google Doc. Stock trades, blank document. So let me just go ahead and go here. So let me just open up a new document. Okay. Let's go ahead and zoom in a little bit. Let's increase the size to, I don't know, 45. Yeah. So you guys can look at what we posted on Reddit and our Twitter page. It's very clear kind of where we're at right now. Folks that are interested, here's the Twitter. You guys can follow more. There's our Twitter page, and you could see, the mic drop is here. The mic drop is here, right? So if you were to go here real quick and just look at the options chain, let's talk about options real quick. And again, this is the phase 3 part of our platform. So it's beta access now. Folks that are in beta access are going to get lifetime access to the stock terminal. And it's really cool because we're going to be building out phase 1 and phase 2 quickly, but phase 3 is going to be where you make a livable income. I think this is the fun part. I think this is where the financial independence comes in. So right now, the options chain, if you were to calculate it for this week, it's paying 21.33%, right? Literally every week. Sorry. Hello. Sorry. Because there's obviously 5 weeks in a month. It's paying this much. The options chain for this week is paying 5.33%. You take 5.33%, multiply it by 4, you get, that's why I put this here, you get per month. You get 21.33% per month. Now, assuming as the stock goes up higher, the options chain is going to even look sexier. In fact, I think when it squeezed, the options chain was around this juicy, right? If not higher. So let's do an example here, okay? Let's do an example, okay? Let's say, for example, Clover reaches its intrinsic value. A lot of folks, let's say 200,000 is the base. 200,000 shares multiplied by 25 is equal to 5 million. Okay. You take $5 million. That's how much is, what your Clover shares are worth. You multiply it by 0.2133. You get, let's see, you get $1 million. You get $1 million per month. Imagine making $1 million per month. You could, if you had just example, if you had $1 million in Clover, if you had 5 million in Clover right now, you could do this right now. You could make $1 million per month, specifically $250,000 plus per week. All right. How powerful is that? That's a Lamborghini per week. That's a Lamborghini a week. You don't even want to buy Lamborghinis anymore because you don't have space for them. Because you know why? Because you have to get a bigger house for all your Lamborghinis, right? Obviously, I don't advocate spending on that crap. So again, the plan is obviously take this, buy properties, wait till a recession, stocks drop, interest rates drop, pull money out of the houses that you bought full in cash, and then take that money, put it in undervalued assets for a recession, and then 3 years later, market recovers, and you've literally 10x'd everything, right? So that's how it works, okay? But you could see that's how it is. So let's give example. So let's say, for example, somebody says, you know what, man, I have 45,000. I don't have 5 million, right? I have 45,000 right now. People are going to say, no, hold, right? It's undervalued. People can make off of this right now, which is $45,000. They can make, it's funny, they can make this much per month as of with the options chain currently. With $45,000 in Clover, you can make, as of right now, you can make $9,500. So you could say here, if so, what are the assumptions and what is realistic? So I think when it goes to $25, I think the options chain won't be 21%. I think it'll be 12%. It'll be like Mara and Riot, right? So I think instead of maybe $1 million, maybe $500,000. But as of now, if you have like $45,000, right? And you're like, you know what? I'm comfortable. Because what happened, the problem is, the people that got their covered calls taken from that too, it's for this Friday, too bad, right? But if you have $45,000 right now, what you do is, I'm not going to show here. I'm just going to verbally say it because I'm going to show. I'm going to put it. I'm doing it as I'm showing you. So, you take 45,000 divided by $3. Why? Because we want the $3 strike price. Let's say, right? And we divide that. You get. So let's try it again. 45,000 divided by 3 is what? 15,000. 15,000 divided by 100 because of the contracts. You get 150 contracts, Brad. Okay. Then you go in and you go to the options chain for Clover Health for this Friday on August 23rd. You say, I would like to sell a put, a cash secured put. It's doing 12 cents. Yesterday was 14 cents. It's decays. You go in and you do this and you say sell and you type in your 150. So for this week, off of 45,000, I can make $1,800 just for the next Wednesday, Thursday, and Friday. Make 1,800, right? Now here's the thing. Let's go out to the one on next Friday. Next Friday is paying 21 cents. So let's just say screw this Friday. We'll do next Friday. By doing that 150 shares, next week you'll get 3,145. So you could do both. You could do the one that pays $1,800 this week. Then you could do the one for next week that's going to pay around $3,150. Right? Already you've made $5,000, and that's just 2 weeks of options. 2 weeks of selling covered calls. So you've made $5,000 for just 2 weeks of options off of 45 grand. Right? So then you take this now and let's extrapolate it and multiply it by 12. That's a residency. That's how much a resident makes. So you see what I'm saying? That's the average. Yes. Good question, Keith. What is the risk? The risk is if you're doing a cash secured put for $3, what happens if Clover goes to $1? It crashes, right? Then you are stuck at buying at $3. So then you reverse the strategy. You do covered calls at $3.50, right? Is it going to crash down to $1 again? I don't think so. It's going to become free cash flow positive. Insider buys. You see how you have to apply logic to it, right? But here's another catch. What happens? Let's say you do a covered call, and the covered call, let's say, is at $3.50, but all of a sudden the stock jumps to $10. That's the risk, Keith. That's the risk. You have to sell at $3.50, right? And you don't get gained on that $10 jump, which is why when you calculate the intrinsic value, this is where it all comes together. You calculate the intrinsic value, you do the technical analysis, you do the Monte Carlo sequence simulation, the simulation, the AI simulation. You fit all of these puzzles together, just like, Brad, when you look at, when you look at a patient, right? A simple one is, a good one was yeah, it's a good one, right? When you have like gallbladder problems, right? If someone has, let's say, I got colicky pain in the right upper abdominal area, but I have no jaundice and AST and ALT ain't elevated. What could it be? Well, it looks like there could be it could be a little a blockage in the cystic duct, right? It's not blocking the common because you have all the data. You stack the AST, you stack the all that stuff. So you stack your technical analysis, you stack your AI analysis. You have, it's like you have multiple tests. You know what I mean? AST, all these things. Jaundice, the clinical presentation, all those things, right? So that's kind of how it works, right? Which is why it's important to have all this information, because the data helps guide, and experience guides the decision making. So that's kind of the idea here, where you can see how lucrative this is, right? You can make this now. You could go ahead and make it, right? That's how realistic this is. It's crazy, isn't it? Right? Welcome to Wall Street. I mean, literally 45,000. You make 5,000 every 2 weeks. I mean, come on now, right? Or around that, right? So you can, right? They say you can retire pretty much. You know what I mean? People can retire off of this or do what they want. I mean, just imagine making $500,000 to $1 million a month. Can you believe that? Can you believe that? Right? It's amazing. And we're going to show, we're going to show it, but it's going to be part of our bundle package. It's going to be part of our platform, right? This is why it's a very premium product. And you can see we're getting premium results. We're up 222% year to date. We're up 222% year to date. Premium product, premium results. Okay. Ladies and gentlemen, that's pretty much it. Let me go ahead and go to the comments real quick. Love you, Patrick. How you doing, James? Brandon, what's going on? MX working hard. Let's go. You know this one. Wait, what was this? Sorry, this one. Wait, this is one those turnaround companies that Peter Lynch describes. There it is, and we reference Peter Lynch, right? All good indicators, hidden assets, excited to not be broke, right? Hell yeah, Jack. Hell yeah. Samurai Jack. All right, Eric Martin, couldn't help myself, bought more Clover today. Yeah, good dip, 69, 347 was a good job. Yep. You saw the intrinsic value. I love you, Brad. Okay, what's going on? All right, so we got everything here. We got all the comments. Clinical gestalt is definitely based on understanding multiple layers of information and data. Thanks. Absolutely. And that's the thing. You'll get that. What's it called? Clinical gestalt. Warren Buffett. Spidey sense. We'll just call it Spidey senses. Stock market Spidey senses. All right. You'll get those because you'll start to kind of fit the pieces together. You start to say, okay, let me use the institutional commands off of the stock. Let me use the institutional commands off of the stock terminal. Okay. No, because options for the week. Let me see. Sorry, I'm responding to this year because no options for the week. Hard to extrapolate over a month. So he was asking if the algo flow, does it go for the month or what? Can it go to the month? No, it goes to the week because it's hard to predict. The statistics behind it, it's very difficult to predict in the long term versus short term. Yeah, so you're gonna get your spidey senses, you know what I mean? And this is important because you're gonna start putting things together, and you're like, oh, okay, we got insider buys. Oh, I'm gonna go to my stock terminal here, and I'm gonna look at the institutional buys. Oh, SEC 13F filing state that more institutions are buying in. Okay, so it looks like to me that this seems like boom, boom, boom. You put the intrinsic value and it's just all these things, and you start getting a gestalt of what's going on. You look at the macro, see what the macro is doing, and it's like a pilot. You're up 30, 40,000 feet in the air, and you're adjusting your portfolio based off of the demands of what's happening with the economy. And the beautiful part is what I like to do is I like to extra diversify, right? Problem is, so you can imagine, making $500 to $1 million a month. Some people are just straight options. They're like, screw it. I'm going to take that million and I'm going to go ahead and do a cash secured put. I'm going to take that premium and I'm going to do another cash secured put. And I'm going to take that premium. I'm going to do another cash secured put. And what's going to end up happening is you're going to compound interest. You're going to basically go to the moon maybe in a couple months, right? Yeah, you could do that. There's a strategy. You could definitely do that, especially if it trades sideways. You're going to make a killing. Especially if kind of using the technical analysis, algo flow analysis, Monte Carlo sequence simulation analysis, and in the technical analysis, you're going to get to a point where you're going to be able to you're versus some retail investor who has their phone on Robinhood. You see the difference here? You see the difference of what data can bring you? We're setting price targets, right? That the market is respecting. Why? Because it's mathematically sounding. All right. Good job. Do your thing. Hell yeah, guys. Well, no, that's all I have for you guys. So it's a privilege and honor to support the retail community space through our educational platform. Definitely for individuals. This is me options. Absolutely. This is going to be life changing. This is life changing money. Don't tell your wives or husbands that you're doing this and just surprise them. Just be like, I got a Lambo. They're going to think that you're, what's his name? The guy from Breaking Bad. You're like, what are you doing? Having like a meth shop outside? What the hell's going on here? Be like, I'm from Wall Street. You know what I mean? So yeah, for folks that are interested, take advantage of our lifetime access. Prices will increase. How you doing, TSS? 1 a.m. Belgium. What's going on? Take advantage of our lifetime access. And also for individuals that are wanting to offset it financially, you can look at our partners for our United States and Canadian customers with Affirm and our international customers at PayPal, right? We have literally customers from everywhere coming in from Europe, China, Russia, everywhere. And it's such a beautiful thing to see this diversity converge and come together. Ladies and gentlemen, let's work together on this. Let's all become millionaires together. Let's go to the moon and let's just live life and let's play the Monopoly game that we played as children, but play it in real life because this is Monopoly and we're going to monopolize the heck out of capitalism, right? God bless you all, and I'll see you on the next one.